Hello friends, I am Hemang Jani and welcome to this special section on investment or delivery based ideas. Friends, in the past 10 days we have seen that the markets have run up quite sharply post the government initiative on key reforms, as well as the global markets where we have seen some important decisions being taken on the liquidity easing, both from the ECB as well as from the US in terms of the QE3 or the asset purchase program. So we have seen the markets run up by almost about 10%, and individual pockets have actually run up anywhere from about 10% to as high as 50% also. And we are receiving a lot of queries about whether the markets, this entire rally is sustainable, and whether there are opportunities particularly in the sectors which have been beaten down so badly in the last 2 years' time. And for that purpose we have thought of identifying the sectors and the stocks where these entire reforms could have a maximum positive effect. So friends, broadly speaking, there are 4 categories or sectors where we believe that this entire reforms exercise which has been undertaken by the government could have a maximum effect. The first one is the PSU space. As we all know that this entire basket had underperformed in a major way because of the lack of policy initiative, as well as the fact that the government was also doing frequent issuances and equity dilutions which did not go down well with the market. The other sector is the infrastructure sector, and which again was beaten down because of the extremely challenging business environment where the fundraising was becoming difficult for the companies. The third sector is the banking sector, where again because of the difficult macro environment, NPL concerns, the sector had underperformed. And last but not the least, the mid-cap sector as a whole had been beaten down badly, and we saw that in the last about 1 year only few large cap companies had gone up. So in that backdrop, what are the opportunities in these sectors, which are the good qualities that one can look at this point of time? I'll quickly run you through each of those. Friends, talking about the PSU space, as I said before, the entire space had been a major underperformer, and now that the government has started taking important reforms in terms of the fiscal deficit front, as well as reforms in the retail and few other sectors, we believe that there could be some kind of a re-rating in this PSU space. And one has to also to take note of the fact that some of these PSUs have a huge amount of cash in its books. So companies like Coal India, Oil India, and few other companies have a huge amount of cash, and in case they come out with some kind of a buyback program, then it could also potentially re-rate this entire sector. Friends, in this PSU basket, we like 4 stocks in particular. First one is Oil India, which has a substantial amount of oil fields in the Rajasthan as well as Northeast region, and the company also has a 10,000 crore of cash in its books. The other one that we like is BHEL. As we all know that the company had a huge amount of exposure in the power sector, and despite a good order backlog, the fact that the order inflow had slowed down, the company actually underperformed in a major way, and we believe that there is a scope for a substantial appreciation in BHEL from current levels. And the other 2 stocks that we like at this point of time are MOIL and Engineers India. Friends, the other sector that we could look at is infrastructure sector, and some of you would remember that in 2009 the entire rally was driven by the substantial fundraising by Unitech. And we believe that we are in a similar situation, and some of the beaten down sectors like JP Associates, Reliance Infra, Adani Enterprise, and some of these companies, they have a huge amount of debt, and if any of these companies are able to raise funds, their balance sheet can actually improve a lot, and that would be a big trigger for re-rating for this entire space. Friends, in the infra space, we have divided this particular basket into 2 categories, the large cap space and the mid cap space. In the large cap space, we believe that at this point of time, Reliance Infra and JP Associates offer good value, and there is a good potential upside for those 2 stocks. And in the mid cap space, we like IRB Infra, which was beaten down very badly, and similarly in case of Lanco Infra, though it had a huge amount of good quality power assets, because the company could not line up the coal requirement and had a massive debt in its books, the company could not perform. But now that the coal availability is going to be resolved, and the fact that some of its power plants are going to be operational, and companies also looking at raising funds to deleverage its balance sheet, there could be good amount of upside in Lanco Infra as well. Friends, PSU banking space also was a major laggard in the market for the last 1.5-2 years, mainly because of the difficult macro environment, because of the lack of policy initiative from the government as far as certain important sectors are concerned, like power and airlines, where the banking sector had a huge exposure. But now we believe that with the government taking important steps on the fiscal deficit front as well as the entire power space, we believe that there is going to be a major restructuring underway. We believe that these NPL concerns have subsided a bit, and still some of the PSU banking stocks are available at a substantial discount to their book value. So we believe that there is a good upside potential in some of these stocks. Friends, from the entire basket of PSU banking space that we track, we believe that two stocks in particular stand out. First one is the PNB, which had its own financial strengths, but because of the exposure to sensitive sectors like power and few others, the company had underperformed. But even at this price, we believe that it offers a good potential upside from current level. The other stock that we like in PSU banking space is Allahabad Bank, which had also corrected about 55 to 60% from top, and it is still available at about price to book of almost 0.7. So we believe that these two stocks in particular offer good value at this point of time. Friends, in the mid cap space, we like Aditya Birla Nuvo, which has a very diversified business model across the old and the new economy businesses like telecom, asset management company, life insurance, fertilizer, and few other old economy businesses. We believe that in particular the insurance and the retail businesses are where there is going to be a direct benefit of the policy initiative that the government has taken of FDI in multi-brand retail and the FDI cap in insurance. If it is relaxed, then their insurance business could have unlocking of the value. Overall, we find that the business quality is extremely good. Most of its businesses are doing well, and because of these two additional triggers, there is a scope for some kind of a re-rating of this stock. So we advise investors to look at that. Remember friends, these ideas that we have shortlisted are for investment with a time horizon of at least 6 to 12 months. Because some of the stocks have run up in the past 10 days, there could be some volatility. So those investors who are looking at investing in these stocks could look at doing it in two parts. 50% of the funds can be allocated at this point of time, and the balance 50% could be allocated over the next 2 or 3 weeks depending upon how the market behaves. That's it from all of us friends. Thanks for viewing.